And welcome back to Barbecue Tips with Matt Tiller, my mate from LJ Hooker, who's the man in the know. Looking at some of the data over recent weeks, we've seen listings drop off a little bit. Can you unpack why that's the case?
Yeah, listings at the moment are pretty much down across all capital city and regional markets. They're down about anywhere between about 10 to 15% in some cases year on year, and around about 6 to 10% below the 10-year average. So it's really tight out there at the moment. And I think that is what's causing some of the price growth we're seeing as well. Listings are tight, but buyers are still active in the market at the moment. So that competition between buyers is really starting to heat up, particularly because we've had a couple of rate cuts already. And, when it's a tight market, that demand supply and balance leads through to higher prices.
It comes into play. Now, look, I'm not an economics finance expert. Now, the fact that you saw buyers there shows that there is still interest in the property market. We're not looking at any major price dips. I think most people are still predicting substantial, in some areas, price growth over the next 12 months. Even in the major cities, there's still a fair few percent growth year on year, even after the back of really high price rises. What's the reasoning behind listings falling?
Yeah, that's a good question. I think vendors have been sort of sitting on their hands a little bit, waiting for these rate cuts to start to come through, just to ensure that they can see there is real evidence that there is buyer demand and that prices are growing, and they can be comfortable that they're going to get their asking price that they're looking for. So they have been sitting on their hands a little bit. But saying that, buyer demand really is pretty strong out there at the moment. Across the LJ Hooker network, we are starting to see more attendance at open homes. We're seeing good attendance at auctions. Auction clearance rates are up above 70% at the moment. So I think as the numbers start to come through over the next coming months or so, vendors really will be confident that they can achieve that good sale price, and that will entice more back out into the market. So I think in time for spring, as long as the agents get out there, do the appraisals, get in front of those vendors, I think we'll have a pretty active spring this year.
You mentioned in some markets, listings are dropping by 10 to 15%, which seems to me to be quite a substantial figure, right? How does that compare to historical data, historical averages, or is it like you and I have spoken about in previous episodes, which is that behavioural economics side, that it's not market uncertainty, it's just, if I wait a few more weeks, I'm likely to get a bigger price?
Yeah, absolutely. I think if we look at the data, really every month this year, 2025, has seen listing volumes below the 10-year average. I think in June, actually, we had less listings than we did in 2020 when we had the COVID crisis. So that's saying something. When people couldn't actually go and physically visit homes, we actually have less listings on the market during that month. So that just shows how tight it is. But I think you're right in the fact that people are comfortable in their homes. They're comfortable just sitting on their hands a little bit and just waiting through the next sort of upcycle, waiting to see that price growth really start to kick off. And then once they do see that, once they see that evidence of prices rising, they'll get out there and list their property. In saying that, the appraisal numbers coming through the LJ Hooker network have been steadily rising, particularly from that first rate cut that we saw early on in the year. We really did see a spike or not a spike so much, it was more like a steady lift in appraisal numbers. So homeowners really are positioning themselves to list. They're just waiting for the right time to do that.
Obviously, there's been a lot of discussions about costs of living and mortgage stress, but from an economics point of view, I would hazard a guess that in the world, if there was a lot of mortgage stress, you'd be looking at a lot of distressed houses being listed. If you've got listings now that are lower than in 2020, like you said, in an era where you couldn't even walk into a house, where you couldn't even view it, So even if someone was, say, ready to upsize or ready to downsize, just depending on where they were in their life circumstances, they probably would have just held off until they can at least view it. I would hazard a guess that then this paints a story about more optimism in the Australian economy, given that you don't have this rush of houses being sold with mortgage stress.
Yeah, absolutely. I think I know unemployment number ticked up slightly last month, but it's still very low by historic standards. I mean, it's 4% or just over 4%. 4.2%, 4.3%. It's slowly ticking up, but by historical context, an unemployment rate with a 4 in front of it is still very tight. So I think that's what's also made people hold on to their property. They're pretty comfortable in their position at work. They're pretty comfortable that they can cover the mortgage, even though we've had really high interest rates over the past 12 months. Think about before these rate cuts came through. Rate cuts were pretty high. The RBA was trying to bring down that inflation. Cost of living was a real problem this time last year. And we didn't see that much distressed selling, and that's because unemployment was still low. We were seeing wage growth, although wage growth wasn't keeping up with inflation. People were still comfortable enough in their household cash flow and household budget that they could cover their mortgage, and they were confident they were going to keep their job for the foreseeable future, and so they weren't rushing out to list their property in distress.
And I think that's a perfect way of looking at it. It's the optimism about the economy, given historical averages. We actually are in quite a good economy at the moment. I remember when I was growing up and I was young, and I was living in London as a kid during the GFC, and I remember just looking at the local high street, and it was just store after store after store after store being shut down, and then you just walk down this ghost of a high street. Compared to historical averages, we actually are in quite a good spot. You mentioned before that appraisals are ticking up, which is quite interesting. I've been quite fortunate to speak to a lot of people at LJ, and that is something that you put a lot of emphasis on in the background for that future lead generation, which is get out the appraisals, because someone might not be selling now, they might be selling in 6 months' time. So it's quite fantastic that the appraisals are going up, because it's likely that more agents will have more listings to sell in the future.
Yeah, absolutely. I think it's a really timely reminder that you need to be keeping in contact with your pipeline, with the homeowners in your market, the people that you've spoken to, and particularly those that you've done an appraisal for maybe 2, 3, 4 months ago that they weren't ready to sell then. They may be ready to sell now, and they probably will be ready to sell once spring hits as well. So it's really a timely reminder that to keep keep front of mind of all your pipeline, your contacts, and your vendors that are in your market.
What kind of data are we expecting for spring? Is it too soon to say?
I think it's slightly too soon to say. We are like I said, the appraisal volumes is there. We do expect some of that to come on. All of it won't come on. I think this rate cut helps. It'll help bring it forward a little bit. I think once we see price growth continue to kick off, we'll continue to see buyers turn up in higher numbers at open homes. Auction clearance rates will stay elevated over the next coming months. And then I think vendors will really be confident that, now's the time to list.
Well, Matt, you're a busy man. I reckon we should jump into these snags. Let's do it.
Another one. Sounds great.